Thank you, Lakshmi. Hello, everybody. Trust you are enjoying being part of Finacle Conclave so far. I am Rajashekara Vishweshwara Maya, and it is my great pleasure to host this panel discussion today. As you're aware, the corporate banking business is facing multiple headwinds today, and moreover, it is accentuated by the challenges of the pandemic situation. For banks to effectively manage a dynamic credit environment, sustain a fee-based income, and reduce the ongoing costs on a continuous basis, and moreover, strengthen the innovation to drive growth, a truly digital foundation is increasingly becoming inevitable. But it brings few questions. What does this mean in the corporate banking context? What are the essential contours of an impactful digital transformation? How will this play out with regard to business models, the channels the customer access, the processes internal and external, and more importantly, the end customer experience? In this session, we will speak with leaders from 3 progressive banks on how they have designed the digital strategy and what they see as key lessons for corporate banking on the coming years. It is my pleasure to introduce the panelists. Faisal Amin, Head of Global Transaction Services, Asia Pacific, Bank of America, is our first panel. Second is Mr. Rohit Joshi, MD and Regional Head of Client Management, Asia Pacific Global Liquidity and Cash Management, HSBC.
Hello, everyone.
And the third panelist is Mr. Vivek Gupta, President and Head, Wholesale Banking, Axis Bank. Thank you, everyone, for taking the time to participate in this panel discussion. And I hope all of you will enjoy this. In next 40-45 minutes, we are going to discuss about the challenges, the opportunities, the potential, the changing business model for corporate business banking. My first question is to Faisal Amin. Faisal, the corporate banking business has weathered a perfect storm in 2020. I think you agree with me. In your opinion, what has been the top 3 priorities of banks to support their business clients through this crisis? And also, if I can extend, what role has the digital services played in this? Can you please share your experiences, Faisal?
Thank you. And I couldn't agree more that this year that has just passed has been unprecedented and certainly has been the perfect storm for corporate banking. When you look at 2019 going into 2022, all of us had some superb momentum and the economic outlook was looking pretty rosy. And then just towards the end of the first quarter, everything changed. And our priority as a firm turned to the health and safety of every one of our employees. However, when looking at it from the business perspective specifically, I think there are 3 priorities that basically stand out. The first one is really ensuring that there is adequate working capital support for all of our clients. As you can imagine, when the crisis hit, liquidity dried up in the market space, and many of our clients were just scrambling to make sure that they had adequate liquidity support to weather the storm. Some of our clients in specific industries were pretty badly affected, and that included industries such as aviation, hospitality, and branded retail, just to name a few. The second area that we focused on and was a priority for us was the continued focus on fee income. When the interest rates go down at such a quick pace at an unprecedented levels, your NIM income is certainly affected. And so the organization has to focus on ensuring that you look at the fee income and remedying some of those declines. And then the third area of focus has been the ensuring the continuity of our business as the market environment and the circumstances change all around us. to ensure that there is very little or no disruption at all. And that's been done through enhanced adoption of digitalization, simplifying our internal processes, platforming our technology platform for better client experience, and then getting rid of our legacy platforms. I think what this particular crisis has done is just accelerated the adoption of digital facilities, because most of our clients are working from home. The operational facilities of our financial institutions have seen reduced number of employees attending work in person, mainly because of the guidance that we've received from the various Ministry of Health around the region, requiring rotation, and that being a best practice during this type of pandemic. Metrics that might be of interest is the fact that when you look at physical check or paper volumes, that has dropped 41% year on year, which is fairly significant. And that just demonstrates how the market is adjusting to this environment. And the other area that we have been very much focused is looking at the contingency plan that leverages our digital capabilities to service our clients and adapt to this changing environment in a couple of areas that I'll share with you, such as account opening, exchanging of documents, e-signatures for documentations that facilitate either the seamless process of trade or cross-border payments, but not limited to that, but also including digital KYC, for example, for corporate cards. Right, so our landscapes changed, and our priorities and focus areas have changed with that.
Thanks, Faisal. That's a very good insight. Starting from liquidity infusion, increase in fee income, digitalization, getting rid of the legacy, and a lot of other things. Thanks for that note, Faisal. My next question is to Vivek. Vivek, I think if you now observe, even before the pandemic, factors such as cyclical headwinds, depending on sectoral changes, sticky costs, changing customer demands, and as well as new and nimble digital competition in the form of fintechs or the big techs coming in to dictate the order of things in the corporate banking was taking place. So in this context, how does being a digital at core fit into the dynamics? What is the potential of digital product engines to fuel the growth of corporate banking business going forward as you visualize and plan for next 2-3 years, Vivek?
No, thanks, and hi, everybody. I think it's well said. The reality here is, I think the last 12 months has shaped our thinking and those of our customers. And we're clearly only as successful as we help our customers become successful. So I think we've taken the opportunity to also think long and hard about the changes we need to make to the business. And for us, clearly, we want to be the best transaction bank in the country over the next 24, 30 months. And core to that, to the point you said, is about being digital, right? And that to me has a representation which we're actually manifesting. We are already into a transformation project, which has everything from changing the underlying processing layer and evaluating where we need to make adjustments to really reimagining the entire customer journey from living the world from a customer's perspective. This has 3 or 4 components. So I spoke about the processing layer. It's also about reimagining how we build the engagement layer. That's basically what the client gets to see. And in there, I think historically, most banks, barring none, have had product silos that the client sees that have different UI and UX. So we're looking to harmonize that across the various transaction banking, corporate banking products that we offer across trade, cash, FX, current accounts, etc. And then what the client actually interfaces with are the channels. And really, how do we make sure that that channel experience is as frictionless as possible? Because there is a considerable amount of friction still that remains. So for us, it's about taking that a step further and how we are building that journey. Very simply put, a lot of the systems that the banks have today are designed from how a bank thinks and how a bank operates, but not necessarily how a client thinks and a client operates. So the client has typically a financial supply chain, then the client has a physical supply chain. And what we are trying to do from our point of view in Axis is to really see how do we understand that as well as we should understand, and perhaps we still have some room to go there. How do we do that across the breadth of clients that Axis has? And how do we bring those learnings into the construct of the front end channels, the underlying engagement layer, and the processing layer? Because ultimately, I got to make banking invisible, right? And it's while it's cliched, the reality is we got to actually make sure that the client and what they are doing in their physical financial supply chain is simplified. That's the role the banks have to play, right? So I think that's pretty much a blueprint that we are kind of working towards across multiple components. We're also making sure that as we recognize data being the new oil, we are actually building the underlying data lakes and the infrastructure that will allow this data to be actually much more fungibly available, visible, utilized, whether it's from a regulatory point of view to ease pain from a customer point of view, not asking the same customer to do a re-KYC because we already have those credentials in the bank. And more importantly, to also help the customer around the product adjacency side. So I hope that gives you a feel of how we are looking at being digital to the core from a transformation point of view.
Absolutely, absolutely, Vivek. Reimagination, harmonization, and making sure that the customer journeys have been taken care and using data to be more competitive and more effective and efficient in the marketplace. Absolutely. Thank you very much for that response, Vivek. Now I'll move on to Rohit. Rohit, the question to you is in terms of taking where Vivek left, extending the discussion beyond the digital product engine. I think the corporate banks have been making new strides in getting into digital engagements and experiences. Given that there are two business organizations' expectations are the same, so what do you think are some of the new possibilities in digital engagement and, of course, experiences that banks can deliver? And how is your bank shaping its strategy to drive digital-first corporate banking experience? Over to you, Rohit.
Thanks, Maya. I agree with whatever Faisal and Vivek has said in terms of the journey that corporates are on, and indeed banks are on. I think from an HSBC perspective, I think our strategy is to be digital first, and we put a lot of investments behind that. In fact, in the first half of last year, over $2 billion were invested in the technology to make our platform simpler, safer, and more personalized for our customers. But however, while we say we prefer to be digital first, we still believe going forward in a blended model. We believe that there is a place, particularly in corporate banking, for a face-to-face interaction to happen. And therefore, the word blended comes to my mind when I think of our strategy for digital. I don't think the role of the relationship manager or the people who service corporate clients will necessarily go away in the near term, but certainly digital will enhance not only the customer experience, but also the efficiency of the people servicing these customers. So that's in terms of where we are in our journey. And it's fair to say that while the transformation and into digital has been really rapid in the retail space, in the corporate space, it's still catching up. It's still early stage. And I think banks have taken a big step forward in the last year or two to make it sustainable for themselves as well as for the customers. And I think we are at that stage where, and I deal a lot with corporate treasurers in Asia, they are beginning to get more comfortable with the idea of going digital. Many have taken that leap, some are yet to take the leap. But they are all learning in the personal banking space what is the possibilities, and they're trying to extend that into the corporate space. So I believe awareness is picking up, adoption of digital is picking up, especially in the last 12 months. That's really accelerated. But I think there's a role for banks in terms of not only getting the investments into digital and building platforms, but building awareness and educating your customer base. In the case of HSBC, we service a whole swath of customers, from the small business banking customers right up to the Fortune 500 companies. So there is a wide range of companies you need to cater to. And I think different companies are at different stages of their evolution for digital. And we're finding that there is a need to hold the hand for some of our clients as they embrace digital, and we are doing that. Having got the platform, got the investments, started the education process, I still believe that there is a need to do needs analysis for some of our customers, with an idea that once they understand what is capable with the platforms that we have, they move towards a self-serve proposition. And they're quite comfortable with that when you speak to them and they understand what possibilities there are. I want to leave the group with a couple of examples of how this approach of ours has helped some of our customers. So there is a hospital group in Malaysia who during the COVID period had to do a lot of COVID testing. And this was dangerous because in the traditional process, you had to queue up, you had to pay for the services that you were going to take, and then that would result in exposure to COVID, etc. So we worked with them, we showed them what's possible in the digital world, and the whole bit about contactless payments and contactless booking even was possible. And they used that experiment for the drive-through testing for COVID-19 because it was completely contactless and therefore safer. So again, this COVID has pushed companies to embrace digital in a very unique way, at the same time realizing that they can get more efficient and a better customer experience. The second example I want to give the group is one of the largest customers in Singapore in the agribusiness wanted to issue bonds. And whilst they were going the conventional way, we embraced the DLT technology to be able to think about, could we do this digitally? And we worked with the Singapore Exchange and the client to be able to actually issue digital bonds and actually, instead of paper contracts, have digital contracts as well. So I think that was an interesting example again of embracing digital in these difficult times. I'm going to stop there with those two examples, if I may.
Thank you, Rohit. I think they're very insightful, starting from the leveraging of the best of the digital and the physical world to bring in the digital kind of an experience to your customers, depending on the maturity where they are, and as well as bringing the contactless and using the DLT kind of technologies to go digital. Very good example. Thank you very much for that insight, Rohit. Faisal, I'm going to come back to you for this question, is in terms of the COVID has not only brought in the new ways of doing business, the business models themselves are fast evolving, and specifically as applicable to corporate banking. In this context, I think what we are witnessing is the future is about building a platform business by tapping new and diverse partner networks within a larger ecosystem. And this is basically to drive the innovation. So what has been, in your view, on platform-based journeys for the banks like yours? Faisal, over to you.
Sure. Look, you're absolutely right about the changing client as well as market dynamics. And for the majority of the international banks, such as ourselves, technology replatforming has actually been one of the biggest priorities, because many of the international banks got to the size they are through a lot of acquisitions and ongoing consolidations. So when you have a scenario of multiple legacy architecture, myriad number of platforms, lots of handoffs between multiple middleware systems, and a very large juggernaut of components, your priority then becomes the sunsetting of these, the legacy architecture and consolidating the myriad number of platforms, minimizing the handoffs between the multiple middleware systems, deploying new cloud-based and modular technology platforms to support the end-to-end digital journey, having on-demand capabilities, leveraging API technology supported by AI. And it's going to be different strategies that are going to be applicable for each bank in terms of deciding whether to build from scratch or leveraging an established partner and their capabilities. In my view, the key drivers for adopting a partner network instead of building from scratch is really the time to market, the low operational cost, the superior client experience, and not to mention the fact that the market dynamics are changing, and do you want to invest your time in changing the architecture of your platform and coding, or do you want to leverage a a platform that is going to naturally evolve with that environment. Specifically in our example, I mean, 2 years ago, if you would told me that this would be smooth, easy, deployable in a very, very short period of time, I would have been skeptical. But having gone through the experience where we've just deployed in one country, I would say that our experience has been pretty remarkable from the perspective that we've been able to do it efficiently. We've been able to do it in the time that was stipulated, and we've had great engagement across the board, making the adjustments that we've needed to make to get that deployment. So this just goes to show that leveraging established partners who have competencies will and can be much more efficient than trying to build it on your own. And needless to say, in this particular example, it's the choice of the partner, in this case, yourselves, Infosys, where the transformation journey was not only smooth, but allowed us to create a golden template for the direction of the evolution of our platform as we go down the road. The other thing that is absolutely critical to highlight and mention is the fact that ROI is an extremely critical metric, because your strategy is based on your return on investment. And the ecosystem-based strategies represent a significant change in how banks meet the demands for the various stakeholders and create value, right? But the most important thing that I want to highlight is that it is critical to bring in the right partner and the right technology in the right measure to ensure that you're future-proofed.
Thanks, Faisal. I think that was very, very insightful. Right partner with the right technology at the right time to make sure that you generate the ROI that is demanded by the management. Thank you very much.
Yeah.
My next question is to Vivek, taking from the cue where Faisal mentioned about the APIs and API-based businesses. So Vivek, the question to you is, today, APIs and the open banking is not just relevant only to retail banking. It is becoming more and more relevant to the corporate banking as well. And the banks, as we see, are setting up a lot of API gateways to help clients with real-time across the continent to access to their cash management, their banking information, and to enable them to perform the transactions with ease. In your case, what are some of the unique possibilities, and how is a bank driving innovation in this space? And also, if you can highlight, what are the key expectations from your clients in this API journey so far you have seen? Over to you, Vivek.
Well, so it's actually a legitimate ask from clients, particularly the complex clients who want to consume APIs. And I think what we need to make sure is that we are providing a full expression of the breadth of our product capabilities using APIs, which we have in place now. We are largely represented on the payment side, and we are working to a roadmap to simultaneously expose that we need to on the trade finance side. I think the important thing is we also got to drive innovation, which we are doing by exposing or getting other third parties potentially to come on, work on the DevOps side and offer up other solutions for clients in addition to what we are. So again, that's part of the roadmap. I think it's important also for us to recognize that as we have clients sending in the data, it's threaded all the way back to the bank's backend system, right? So it should not be a paper drop from what actually is coming from the client as APIs. So multiple aspects to it, clear recognition. It's driven by the more complex clients. It's an ask that we see increasing in size and depth and breadth. And it has significant ramifications for us. So we're actually well entrenched in that space and expanding to serve our client needs.
Thank you very much, Vivek. I think at scale and making sure that last mile connectivity is as painless as possible and making the mix of these APIs to monetize is the roadmap. Thanks for that insight. Rohit, from HSBC perspective, the question to you is on, we have witnessed some of the areas, especially during the pandemic, the key problem is being able to foreseeably look at the business disruption and as well as the loss of control over liquidity and working capital management, and specifically for the corporates and the SMEs. How can banks help the corporates address such a cash flow disruptions And how can virtual account solutions play a role in enhancing control over liquidity and bringing all of their accounts under one umbrella to manage the working capital much better? What has been your bank strategy in this direction, Rohit? So this is my question to you on the working capital management, cash flow disruption, and as well as liquidity management. Over to you, Rohit.
That's a very pertinent question in today's day and age. I just want to go back to what Faisal summarized in the first question in terms of the various disruptions that took place thanks to COVID. And if I were to just delve on that and pick up a couple of them, which I think are pertinent to the question here. The first thing that we saw was this scramble for liquidity because customers were drawing down the lines or using a supply chain solutions, just staying liquid because no one knew what tomorrow would bring. And I think it was just getting into a safe harbor and being able to then run the business. There were payment obligations that were coming up, and because of the disruption, people working from home, they were struggling to make those payments in time. They also didn't have entirely visibility of what their cash positions were, particularly those customers who had not embraced digital and not gone on to the banking channels that we provide in all the banks these days. The other element was, especially when there was a paper-based operation in a particular company, they struggled because you couldn't possibly go around getting signatures in a COVID environment where everybody's locked in. So those were some of the disruptions that I want to sort of highlight in the context of this question. Another trend, other than the liquidity trend that we saw, was the rise of e-commerce. And I think that's, I'm sure, a topic that you will cover, Maya, at some point into the discussion, because that's been the biggest beneficiary of COVID in 2020. So when we spoke to customers, obviously the first thing was those who did not have a platform, had not signed up for the bank's platform for actually doing electronic transactions, they scrambled to get that done. And I think that was our first job, to ease them into that journey, to get them signed up so that they can actually start seeing the balances that they have and actually making transactions electronically. So obviously our channel is called HSBC Net, and that was hugely popular through COVID, as I will mention later on in my update in terms of the uptake that happened on that. But within that, we've got something called a liquidity management portal. And since your question is on liquidity, I thought I might speak to that. This allows customers to see the cash position, not only within HSBC, but across other banks as well, and across geographies. So this one tool allows them to see what they have, where they have it, which entity is short, which entity is surplus, and so on. So I think that was hugely useful, particularly in an uncertain time that we had recently. Within that, there was another tool that we have developed called the cash flow forecasting tool. And again, that is useful in uncertain times to know where you are 1 week ahead, 10 days ahead, 3 months ahead, and so on. And you can actually go up to 3 years if you so desire, to get an understanding of what your cash position will be in the future. Again, a combination of a digital channel, a liquidity management portal, and a cash flow forecasting tool gives treasurers the comfort that they need in times of such disruption. Now, just moving a bit to the virtual account piece that you talked about, again, hugely useful. It started off allowing customers to reduce the number of physical accounts that they have, and allowing for identification of the payer to be made easily, and then downstream allowing for ease of reconciliation. That was the original way it started. And obviously that helps in managing liquidity and ensuring that your processes run smoothly. But then more and more I see that it's becoming more useful for actually making payments. And now we've got a next generation virtual account, which actually helps with collections as well. So it's an evolving space, but clearly something that customers are finding hugely useful in improving the efficiencies of their operations. I did mention that I will speak to some numbers, and I do have some in front of me, so worth highlighting in the context of what you've asked me. Electronic signatures, again, I think Faisal and Vivek both have mentioned that, and we've got it operating in about 10 markets right now, and I think that's going to increase as we go along. The usage of HSBC Net, our electronic banking platform, went up 155% in the last year because there was no other option really. Mobile payments in one quarter last year went up 220% quarter on quarter. Your electronic payment volumes have gone up 45% in Hong Kong on the faster payment system. So just data points which tell you how digital is being embraced by our customers.
Thanks, Rohit. 155%, 220%, 45%. These are all astonishing numbers in terms of it would not have happened if the pandemic was not there. Probably pandemic has given us more opportunities to do a lot more digital. Thanks for that insight, Rohit, from HSBC perspective. Faisal, I want to know, go back to your response. You mentioned about the increase of uses of AI and ML has happened, especially when you spoke about in the context of a partner ecosystem and a platform business. So in your opinion, the post-pandemic recovery will vastly vary from industry segment from one to another. I think that is clearly visible. And to support client conversations, we believe that the banks will need to develop deep sectoral insights and to know which sector will pick up first and which sector will pick up fast, and as well as offer targeted propositions and based on each of these clients' insight that you generate. So in your opinion, what's your view on how advanced technologies such as artificial intelligence, machine learning, and augmented analytics will help drive this specific portfolio and specific strategies for these segments, and as well as look at the renewing the growth? So over to you, Faisal.
Thank you. Look, before I get into the here and now, I think it's important to highlight that data analytics and business intelligence has always been critical to quality client conversations. Clients are always seeking insights on how they can improve. Different clients have got different strategies, and this results in different kind of performance results for on their working capital cycle, as well as their weighted average cost of capital for each firm. If you can make a difference in improving that, then a real value is provided. And you know, all banks and bankers have relied on the in-house CRM tools over the past few decades to source as well as gain insights in order to bring a higher quality of conversation with your clients. However, when you actually look at the capabilities that current platforms afford today, as well as current technologies afford today, you can actually get into areas such as augmented analytics. And what this consists of really is data analytics, AI, machine learning, natural language processing, which will only help bring greater efficiency, objectivity, and quality to the advisory in a much, much more timely fashion. In short, when you look at these technologies, it brings to one's fingertips the democratization of data, which is making data and informed insights available to everyone, facilitating much faster decision making with much more accurate forecasts, predictions based on historical data analysis, and some projected assumptions that are provided by the clients themselves. Automated suggestive suggestions such as making intelligent recommendations. And at the end of the day, this is making the data and analysis more meaningful and more actionable for the clients.
Thanks, Faisal. I think that's a great response, considering that the usage of AI and ML has been restricted only to retail so far, but your response in terms of replacing the legacy CRM to customers, to know customers much more in depth, especially in the corporate sector, that's where the AI and ML comes into picture, and as well as using the data in a much more rigorous way. Thank you very much for that insight, Faisal. So Rohit, I'm going to ask you this question now. Considering that the digitization in Asia and as well as globally was fast-tracked, considering the response that we need to give it to COVID-19. In your opinion, how do you think the experience from last year will help corporates decide on their business strategy going forward? And what are you hearing from the industry leaders in terms of the trends whether it's for the corporate from a opportunities perspectives or in terms of the challenges that they're going to be faced. So this question is to you, Rohit.
Thank you. So in HSBC, we conduct an annual survey. It's called the Navigator Survey, and that's just got concluded recently. It covered about 10,000 businesses globally. 4,000 of them were in Asia. And I think some of the findings that came out of that are worth mentioning in the context of the question you've just asked. So in terms of priorities and timing for tech investments in the companies, in the businesses that have been surveyed, I think the top 3 priorities came around cash flow and capital management. Now, that's clearly driven by what they have seen in 2020 through the COVID cycle. That cash flow is right up there as one of the top priorities. In fact, 47% of them said that that would be their priority. And there's a couple of other priorities which are more around marketing and sales channels, which is more to do with the e-commerce and the digital sales world that they're heading into these companies. Again, another almost half of them said that that would be their priorities. So that gives you a flavor for what customers are thinking in a post-COVID, and they're very aligned towards keeping liquidity top of mind and capital, and also how do they drive revenue through new markets and online sales. The other 2 areas of investment were on product innovation, and I guess they're all tweaking their product suite, if you like, to make it more readily sellable and into newer markets. And then, of course, customer experience came up. The investment in customer experience from these customers was very high on the agenda. 45% of them said in Asia that that would be a focus area. So again, some areas worth highlighting in the context of the post-COVID era and what businesses are thinking in that regard. What else are we hearing from customers? I think clearly the supply chain organization of most companies is under scrutiny from a what-if scenario. And I guess a trend that I'm seeing is what I call a China plus one approach. And a lot of the supply chains are based in China, and there is a need to sort of have another reliable source of supply, if you like, or even manufacturing for that matter. So the China plus one model is something that we are beginning to see, and ASEAN, in fact, is a big beneficiary of that from what I'm seeing sitting out of Singapore. The other element is the supply chain resiliency. I touched upon it in terms of the survey, but I think when you look at some of the conversations we have had with our customers, they're talking about the selection of suppliers now includes an understanding of the operational resilience and ability of those suppliers to deliver quickly. Where they're located and are those markets in which they're located, do those jurisdictions have a good COVID record or COVID recovery record, if you like? And then are they close to their customers so that there is no delay in actually transferring materials to where it's required. So it's interesting that these are some of the challenges that the supply chain is facing post-COVID and some of the considerations that we are hearing at the top table.
Thank you very much, Rohit. I think we'll be eagerly looking out for that report to understand all the inputs from 10,000 plus corporates and specifically 4,000 plus corporates in Asia region. Thank you for that insight. Vivek, the question to you. I think collaboration had started just before the COVID. I think COVID has now made it more and more relevant. So especially corporate banks have made strides in pursuing inter-organizational automation by using blockchain or any other distributed ledger technologies. So this has not only helped, in our opinion, large banks to take forward their platform strategy and as well as transform banking in key areas such as international trade, international payments. So can you share your views on this specific usage and as well as inter-organizational automation? And how will this likely to gain momentum, particularly in post-pandemic dynamics? So over to you, Vivek.
Well, thanks. A very pertinent question. I think both the speakers, both the panelists have already talked around the inter-organizational efficiencies that are being worked upon. I'd like to touch on blockchain. I was very closely associated in my previous life before I joined Axis in Hong Kong with what I would think is the first, reasonably serious commercialization of trade using a blockchain platform, which is E-Trade I think the reality here is you'll have different jurisdictions approaching how blockchain initiatives take shape at a different pace, with a different operating model, right? And we can't force those choices. I think what we have to be doing as banks in India, we are seeing some moves being made on this space. We have to actually be embracing of all such opportunities. I think there are two parts that we need to solve for as banks. What happens at a jurisdictional level, and we as banks and Axis certainly, how do we influence the progressive movement towards adoption of blockchain-based transaction banking or trade platforms? And the second is we got to also influence the regulators, which is what I was doing in my previous life, and helping them see the role of actually what a super connector is. So disparate jurisdictions going with a different pace, different operating model on the underlying blockchain platforms, but the super connectors, essentially funded, sponsored, led by the regulators that link up these disparate systems. So think about it this as typically what I would like to, very commonly talk around the analogy of an airport, right? The super connector is basically the airport, the circle in the middle, right? That's actually constructed by the regulators, funded by them in a collaborative fashion. But more importantly, I think, you have different docking in ports, and the different docking in ports, in my view, represent the different jurisdictions, each of whom behind the port have gone with a different choice that they have made. Could be blockchain, could be database, etc. But essentially, they all connect through the common circle, the common super connector circle facilitation that's been done by the regulator. So, kind of long story short, I think with technology, with embrace and recognition of why that is important, moves are taking place. I think it's a key success factor in here would be, in my view, good public-private sector partnership. A key ingredient to making it successful would be us and our ability to influence the regulators to come to the party. And they have been doing it in progressive jurisdictions. And we are absolutely sure that the same will happen in India. So again, that's pretty much the roadmap we have. That's the view I hold. And I'm confident.
Thanks, Vivek. That is really encouraging, especially where we come from. And we also see a lot of interorganizational automation can be conducted using different DLT technologies. And you're absolutely bang on in terms of making sure that the collaboration with the banks and bringing a super connector like a regulator and making sure that they're also party to this entire journey is going to help the industry and as well as the customers in terms of improving efficiency and as well as effectiveness. Thanks for that. Rohit, and this question to you, specifically you talked about during the pandemic, there has been more than 45% increase in your payments. So my question is on, as you observe, the payment industry is fast evolving and for the better. So with over 50 countries and counting in the loop, the real-time payments juggernaut is going on. So what innovations do you see banks driving, and how will this influence the corporate cash management dynamics? And what is likely the role you envision in the harmonized standards that is going to play, specifically when it comes to in terms of real-time payments area? Over to you, Rohit.
I just want to say that that's the biggest movement that's happened recently in the cash management space is the real-time payment piece. Vivek talked about a super connector, and I think in many places it's the regulator in this space who've been driving a lot of the changes in the payment space, particularly RTP. The volumes have obviously gone up, as I mentioned earlier, and the example that I gave was on faster payment in Hong Kong, which is for HSBC one of the biggest markets. What we are now seeing, and there was some mention of it in the earlier discussion, is how customers have embraced this. They found it increases the efficiency of their collections, and therefore they're now leveraging APIs and RTP capabilities to create unique propositions, and we are helping them in that regard. So if I were to just take an example of, let's say, payments, and if I'm a food delivery company who's in COVID, I'm sure all of us have ordered food home and have had to pay through to one of the food delivery companies. Now, if the delivery boy wants to draw down his share of the pie. He's able to do that using APIs and the RTP. So that money goes to him or her immediately. On the collection side, we also have something called Omni Collect, which is the ability to collect monies across a range of cards, debit cards, credit cards, wallets, and so on, through a middleware platform that we have. So the client doesn't have to have separate connections with each of those wallets. So that's been another use of where we've got RTP into play for the benefit of our customers. And in India, interestingly, one of the fund administrators has used the UPI solution and the RTP platform to be able to actually validate beneficiaries as well. And also in some cases, you could argue that that was also used to work around or cover off the KYC angle of some of the investors, as it were. So the usage is increasing in volume terms, but also in terms of the innovative ways in which each client in each industry is using RTP. In terms of harmonized standards, I think the current situation for RTP is such that it's largely domestic and mainly within the countries. But as we go cross-border, and that's inevitable that we will go cross-border at some point, you would need, akin to, let's say, a Swift GPI kind of harmonized platform, which enables a clear and transparent interpretation of the do's and don'ts. I guess that will be step 2. But at this point in time, I think with what we have, the innovation is quite strong within the countries.
Thank you very much, Rohit, for that. I think considering the time, we'll move into the Q&A session. And we have received a few questions from the audience. So each of the panel members will have 60 seconds to answer and provide your insights for these questions. We will try to answer as many questions as possible, audience, and as well as the chat box is open. So please make sure that you send in your questions, as many as possible. I think we have received a few questions. The first question, and the question is around, the pandemic has shown that small business segment success is important to the revival of economy. In general, this segment has deserved greater focus importance. Do you see this changing measurably? How prepared are most of the corporate banking operations to offer differentiated multi-segment offering, and how can that be addressed? I think this is the question from the audience. I will start off with Faisal. Each one of you has 60 seconds. Faisal, over to you to begin with.
Sure. So the way I would approach this is as follows. When you have a platform that is customizable and tweakable, you have to have a base level of capabilities, but then you've got to be able to allow for this set of capabilities to be customized to the last mile requirements. And the new platforms actually allow us to do just that. And the other aspect is when you leverage partners and not just do the build in-house, you have the ability to then leverage off those capabilities to get much higher customization as well as speed to market. So I don't think that those are incompatible. And given the evolving needs, and it just points to the fact that today's technologies are well positioned to cater to those evolving requirements.
Thanks, Faisal. Rohit, over to you.
Yeah, so great point, Faisal. In the context of HSBC in Hong Kong, we are a community bank practically in Hong Kong, and we have a role to play in the societies in which we operate. So we talked about user interface, and we've sort of had a very simple user interface for the small businesses as one element of our approach to helping small businesses transact with us. But more recently, and this happened last quarter, we've actually launched something called Vision Go. This is a platform for the B2B digital community platform, really, where small businesses come and exchange ideas. You've got about 15,000 members who have already signed up for that. So it's going beyond banking. It's going beyond just providing a set of simple products or a simple user interface, but actually encouraging discussion on a platform that we have created. So you've got thought articles, you've got 2,000 over articles that are in that platform, and it allows a two-way conversation with customers, with each other, and indeed with the bank. So again, it's not only just the platform or the product, it's going beyond that to facilitate discussion and knowledge sharing.
Vivek, 60 seconds response from your side.
No, I think my esteemed panelists have covered it well. I think from my point of view, we got to live in the customer's world. Like I said, the current platforms are a bit from a bank mindset. We're looking to change that certainly at our end. We also got to recognize that different customer profiles will consume channels, will have needs which will be different, more complex customers using APIs, preferably the more vanilla offerings using the internet banking and the customizations. I think the key issue that we need to at all times be cognizant of is what is the underlying friction, right? And how do we basically cut the friction as best as possible? So, I don't have anything further to add to that.
Thank you, Vivek. I think we have one more question from the audience. Very interesting question. How do you see banks and fintech-led disruptions co-creating enhanced propositions for the end customers? What would be the giant propositions that will augur well, and even as the pandemic subsides? So I will start with Vivek. So your viewpoint in 60 seconds.
No, I think, listen, we can't do everything ourselves. It's a question of figuring out what are we good at as a bank. And Axis, I'm certainly helping us from a banking point of view, make those choices. We are good at assessing the risk. We are good at managing the risk. We are good at linking up the client's physical and financial supply chains. Therefore, where we need to recognize we build on those capabilities ourselves and we partner with others for maybe the platform, maybe for the outreach that they have, we'll make those choices. We've got to find out where the best fit is. So like I said, there is a huge amount of business to be done. We can't do it all ourselves. And we've got to be focused around what really differentiates us and what are we good at.
Thanks, Vivek. Rohit, over to you.
Very similar. I think the fintechs have the ideas, they have the solutions, they are quicker, cheaper, faster. The banks have the clients. So there has to be some fruitful marriage between the two to make the entire ecosystem successful. We've had some successes. I mentioned cash flow forecasting. That was in cooperation with the fintech. There's another one where customers were complaining about the inability to reconcile supplier payments. They didn't know who has paid them and how much they paid them, etc. So we collaborated with another fintech because it's not core to what we do from a tech stack. And we collaborated with the fintech to get a system in place which allows customers to now reconcile almost 97, 98% of their invoices. So there you go.
Interesting. Faisal, your 60 seconds response to the fintech and the banks.
Sure. So look, I think both Vivek and Rohit covered many aspects of this. What I will say is that this speaks to an ecosystem. And I think that there are many contributors to that ecosystem, whether they be a fintech player, whether they are a financial institutions, non-bank financial institution, or even a regulator. And clearly, there are some really good ideas coming from new fintech players. The challenge they have is that oftentimes they have to go for niche to create a proposition and a carve out. And the other challenge they face is cash burn. But there are many fintechs that do survive and they do very, very well. And whether you're a financial institution or any other player, it makes a lot of sense to partner with these fintechs. As Rohit and Vivek has mentioned, we've got quite a few of those partnerships, whether it be in the space of collections, be in the space of payments, whether it be in the space of your liquidity management, or for that matter, even trade. And without going into the components, the most critical element to determine is where is there a value in that partnership to create a better proposition for a client or a better client experience. And to the extent that it makes sense, we have clearly seen that it's worked very, very well for us, as well as the fintechs, tech players to collaborate and partner. Just one final point that I would make. You see a lot more collaboration in the corporate banking space. as opposed to the retail banking, where there are certain services that get disrupted because fintechs simply do it more efficiently. But when you actually look at corporate banking, there's a lot more synergies to be had in order to ultimately create a viable solution for both players.
Interesting to know that, Faisal. Thank you very much, Faisal, for that. I think with that, we come to the end of what's been a great conversation. I learned a lot and hope the audience also learned a lot of things, especially how these three banks have managed to come out of the pandemic and support the corporate banking and have a lot more in the planning stage for them to offer. A big thank you to all our esteemed panelists, Vivek, Rohit, and Faisal, for taking the time out and joining us and providing your valuable insights, and as well as sharing some of the plans and roadmap that you have for the corporate banking. And thank you all the audience attendees for making the time to attend this. I do hope the session was useful and there was much you could take away from these discussions. Do feel free to come back to view this recording, and as well as look out for the follow-up mail from our team with the video link. Feel free to share the same with your colleagues who couldn't attend today, and make sure that you spread this message. And I hope you will stay tuned to Finacle Conclave 2021 and enjoy the high-quality speakers and the discussions lined up for you from the practitioners. Goodbye and stay safe. And thank you very much, panel. Again, back to you, Lakshmi.